10 stocks to watch next week. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the t-shirt to prove that fact. And I know what you're thinking. This isn't the usual quality. No, I'm actually recording off of my webcam right now, very sadly. This is what my SD card looks like right now. I don't know what happened. It's broken. This is the camera I usually use to record videos. I somehow don't have a spare SD card. Don't ask me how. You would think that as a YouTuber you would, but I don't. So I'm going to have to put up with this for a few days. I'm sorry guys, I will get a new SD card. If it's an issue with the camera, I'll have to send the camera out, or else I'll just get a new camera. But it's not the end of the world. All of the juicy information that you guys are here for will stay. So I've kind of given away the first company we want to speak about. But anyway, if you haven't seen one of these videos before, we speak about 10 companies that I will be keeping a close eye on next week. In today's video, I'm going to structure it a little bit different than usual. We have 6 companies that are completely non-EV related, a couple of which I have never spoken about on the channel before, such as the one you are looking at in front of you. And at the end of the video, I'm just going to give you guys a quick recap in regards to, you know, the stocks that we speak about on this channel. A whole lot, all of our EV plays. So right before we get into this first company of today, we're looking at the ticker symbol ELY, Callaway Golf, a very interesting one. Can I please ask you to hit that juicy like button, my friends? If you're new around here, please consider hitting that red subscribe button. We are so close to 50,000 subs. And drop me a comment down below. I want to know what you guys are watching next week, because next week is a very exciting one for a couple of reasons. Of course, we have the US election on Tuesday, the 3rd of November. That led to some absolutely insane volatility this week. We'll have to wait and see what happens next week. But anyway, first company of today, something we've never spoken about on this channel. A company called Callaway Golf. So if there's any golfers watching, you guys know exactly who these are. Fun fact, Ireland just went into a second lockdown, okay? About 2 weeks before we went into lockdown, I went to a driving range for the first time of my life. I went ahead and I bought a full set of golf clubs, and I haven't got to use them yet. Quite upsetting, because I feel like I'm going to get into this, but anyway, we move on. So Callaway Golf, $15.49 a share. On the 6-month chart, we're up 17.26%. If we go back just to the 26th of October, they were up over 50%, but we had this big drop of pretty much 25%. Why was that? So essentially, the company went ahead and they provided preliminary 3rd quarter results and announced a deal to acquire Topgolf Entertainment. So Callaway already owns 14% of Topgolf. They will acquire the golf entertainment company in an all-stock transaction, valuing Topgolf at approximately $2 billion. And a lot of people think that Callaway are overpaying as of right now. That is part of the reason why it sold off. So Topgolf and, you know, companies of the likes have been gaining a lot of popularity over the last few years, okay? And Topgolf generated revenue of about $1.1 billion in 2019, which has grown at a compound annual rate of 30% since 2017, which has been fantastic, of course. But now this, okay? So Callaway provided preliminary 3rd quarter guidance, okay? Brewer said its business has been recovering from pandemic-related impacts, of course, more quickly than expected. The company said it expects revenue growth of 12% in the 3rd quarter compared to a 34% drop in the 2nd quarter. So that's good. That's very promising. But of course, there is going to be a whole lot of dilution, and Callaway will assume approximately over $500 million in net debt with Topgolf. So I mean, we see some positives, we see some negative. I am in the process of doing deep due diligence in these guys. I like what I see so far. I don't know if I like the valuation just yet, but there's a couple of reasons I like this in particular. I mean, we just saw the preliminary 3rd quarter looks a lot better than the 2nd quarter did revenue wise. A lot better, my friends. And as long as there isn't to be any more lockdowns, I don't see why Callaway Golf can't continue to just get back to growing and growing. Now, we are going to have more debt, but we also are going to have Topgolf. I'm definitely looking at these guys as a long-term opportunity. I don't think we're going to see the craziest swings in the world. But with that being said, we did just see a near 25% one. You can see when the crash hit these guys, it hit them hard. They were down 75%. They proceeded to run up nearly 300%. In fact, they did at one stage, but as of right now, they're still up 190% from the very bottoms. This is Callaway, guys. I don't see them going bankrupt anytime soon. Now, I've only looked at the financials very briefly, but I really don't. I don't think they're going to disappear. They're such a massive name in the world of golf in the first place. I probably will end up making a full video on these guys very soon, but that's the first company. Now, boom. One I have gotten asked about for so long on the channel, but never covered. We're having a look at a company called Teladoc Health. Now, you can see these guys actually have a share price of about $200. You can see on the 6-month chart, we're up about 15%. There has been a lot, and I mean a lot of big swings. There we just saw a 25% dip. There we see a 21% upwards movement. Here, over the span of a week and a bit, 30% up. It's been crazy. And yet again, what happened over the last couple of days? A 13.43% crash. So shares of Teladoc Health were losing ground Friday after the telehealth specialist announced it had completed its merger with Livongo Health. So a lot of you guys will probably be aware of who they are as well. the health tech company best known for its diabetes monitoring platform. They've also been doing absolutely incredibly over the last 12 months. So investors didn't like the merger when it was first announced in August, selling off shares of both Teladoc and Livongo on the news. I remember seeing this. So the deal to buy Livongo was nearly all stock. Okay, Livongo shareholders received 0.592 shares of Teladoc plus 11.33 in cash for every share of Livongo they owned. Based on those terms, it's hard to argue that Teladoc overpaid for Livongo since it's used its own stock, but the deal, which came after both stocks had surged in the previous month, seemed indicative of a bubble. Now everybody is calling tech a bubble, everybody's calling everything a bubble right now if it goes up. Teladoc, however, did report strong third quarter results earlier this week, including a 109% jump in revenue to $288.8 million. So look, I think this is going to be very volatile for a while. I mean, all you have to do is look at that 6-month chart, but I do think from a long-term perspective, there's a lot of potential here. So if you don't know what these guys do at all, okay, they say it themselves, Teladoc Health is transforming the healthcare experience and empowering people everywhere to lead healthier lives. So they deliver virtual care, enable virtual care, and empower healthier lives. So it's of course something I like to see. You know, it's online, it's this massive sector, and I've spoken about healthcare moving online a few times in the past, and I do think it's going to be necessary at some stage, especially given the times we live in right now. I do think it's quite exciting. And you'll see here, okay, they were both founded with the same mission. It does make sense for this to happen, to create a new kind of healthcare experience, one that empowers people everywhere to live their healthiest life. Together, our team will achieve the promise of whole person virtual care, leveraging our combined applied analytics, expert guidance, and connected technology to deliver, enable, and empower better health outcomes. So I do think from a long-term point of view, this is going to be good. They're going to be one big, powerful company, but I do think it's going to be very volatile in the short term. I will be keeping a close eye on them. I don't own a position in these guys yet, but we're getting to prices where I could see myself being relatively happy buying, but we're in very volatile times as it stands, so you know, I'm going to take it slow. Boom! Disney stock, a company I have not spoken about for a very long time, but I have to admit, I'm considering buying more, even at current prices. So, I mean, I bought these guys a long time ago. I have a very small position. I think I have a cost basis sub $100. Maybe it's just over 100. So I'm up a little bit, obviously. The last 6 months have been fine. Now, keep in mind, Disney isn't the normal company we speak about on this channel. It's definitely not what I would consider to be a growth stock. It's decent. Now, if we go back to the 5-year chart, you'll see it's very clear to look at it. It is very, very volatile. Now, if we do go back to the max stock chart, obviously you hold these guys long enough, you're making a whole lot of money, and I don't think Disney is going anywhere anytime soon, and I think that Disney Plus is a massive catalyst for the next couple of years. But I love Disney, you know what I mean? I really do. I just love everything that they do. They are innovators. They are always keeping up to date with the times. They also have the parks, which of course haven't really been running anywhere near full capacity if they have even been open over the last 6 months or so. So it's been a very tough time, but they've been resilient, and I do think they've done quite well, you know. To me, this is just a relatively defensive investment. Now, I also completely appreciate there most certainly is potential for these guys to dip back below $100 in my opinion if things go really wrong over the next couple of months. The standard things, you know, if the world can't open back up, if they can't open back up their Disney parks, if a big massive second wave of the Rona comes back, if we go back into a full lockdown, if there's no vaccine, etc, etc, it's going to affect Disney the same way it will affect the large majority of companies out there. But with that being said, I am genuinely contemplating adding more. I know it's not my typical kind of investment, but we have been downtrending. You know, as of late, we're down 10% pretty much in a month or two. If we can go down another 10-15% start to approach the 100 mark, I'd probably buy some more. I know the last 5 years or so, we haven't seen immense growth, but that doesn't necessarily mean we can't see it going forwards. Google stock, baby. Okay, so Friday, we went up about 3.5 to 4%. We were actually up over 7%. I think it may have even been 8% on the day before selling off, but they've very much so outperformed broader tech, you know, Facebook, Amazon, Apple. They were all in the red. And this was actually really nice to see because Google had been lagging behind them all for the longest time now. They haven't really been doing much. I mean, look at that monthly chart, guys. Even after that run up, we're up 8.6%. Before that run up, they were up 1.5% in pretty much a month. And I mean, even the 6-month chart for Google, 22.68%. Obviously, 22.68% in 6 months, that's good. That's absolutely fine. You're not going to complain. But I mean, it's not a lot compared to some of the other big tech. So essentially, Q3 earnings came out. It was pretty sick. I mean, Google's, Facebook's, Apple's, Amazon's all came out around the same time. Google in particular, the company beat Wall Street's revenue expectations across each major section. The company saw strong advertising growth, quelling fears of falling spending due to the Rona. And that's exciting, and we can take that into a lot of our other tech stocks. We can take that into our Facebooks, even into our Amazons. Executives said that beginning in Q4, the company will break out operating income from Google Cloud. Boom! So it was very positive Q3. which, you know, given the times we live in, given the times we've been in over the last few months, very good. So EPS was 1640 versus 1129 expected. They smashed it out of the park. And keep in mind, they still only went up about 3.8% at close. Revenue of 46.17 billion opposed to 42.9. Google Cloud up a little bit. YouTube ads up considerably. All is looking very good. That EPS in particular is fantastic. Now, if you guys watch this channel, you'll know that Facebook, Apple, Amazon, they're all pretty much my favorites. You know, they're my big three favorite big tech stocks. I do really like Google as well. I have generally said it's a close fourth, and then Microsoft is there as well. But seeing that they posted such a good Q3 is, you know, making me consider buying more, which I have not done, so I have not considered doing so for a considerable period of time. So worth keeping an eye on. I want to see how the market reacts to them over the next literal few days, and I may add to my position. Again, I have a small position in these guys. I'm not up very much, maybe 15% or so. Okay guys, Sunrun. So I spoke about these guys relatively recently on the channel as well. 6-month chart, okay, they were up as much as over 500% since they have sold off pretty much 35%. Another red day on Friday, pretty much the whole market was anyway. So they're an American provider of residential solar electricity. I have been doing more research into these. I haven't made a full video on them yet. I've put a fair few hours in, and I have to say I'm getting more and more excited as I look into these guys, especially compared to some of the peers. And also, it is a general consensus that solar stocks are going to probably hold their own a little bit better than some other industries over the next couple of weeks with the elections. But from a long-term point of view, I'm not too worried about that, especially if I don't buy into these guys before next week. That won't affect me too much, but it's worth noting. So investor place, obviously I don't really like going through these too much, but I want to show you guys this, okay? Increased uncertainty presents a huge opportunity for Sunrun stock. An important vote and earnings are on tap next week for Sunrun investors, so that's obviously why we have to keep an eye on it. I like this here, okay? Considering Run stock's October stumble of 36%, the loss in valuation is standard fare for a volatile stock of Sunrun's caliber. Losses on either side of 30% driving risk on trading environments are routine. So keep that in mind when we speak about a lot of stocks right now, because a lot of stocks have been wiped out 30% of their value plus. And in less benign market cycles, corrective declines of 40 and even 50% aren't uncommon. So Wall Street's analyst community is forecasting 2 cents per share on sales of $209 million from Sunrun when it reports November 6th. Just keep your eyes out for this, guys. And yeah, more importantly, investors should be braced for significant gap risk, which works both ways. So more than likely, I won't buy these guys next week, but I will watch them 100% November 6th. Alright, and the next one, Virgin Galactic. Let's just look at that monthly chart, baby. We had shot up, okay? We're above $23 a share. Boom, sell off nearly 25%. We're back in the mid 17 range. And I'm not upset about this because I will happily buy more, especially if there is 1 or 2 more juicy red days. I mean, if we could get a 15% red day, I mean, I'm going to be quite a happy person. I think these guys are still a good buy below 17. Not necessarily right now because of the market conditions, but even if we were to drop sub 15, given the current market conditions, I would be quite happy to buy there. Now look, worth understanding, these guys are high risk, they're highly speculative. A lot of things could go wrong, a lot of things could get drawn out. I want to say that. If that's not the kind of investor you are, you know, stay away. But for me it is. I'm long term on these guys. I do appreciate their high risk, a lot could go wrong, but yeah. So essentially, there's this to speak about. Ever since October 22nd, the window opened for Virgin Galactic to run the next FCC approved flight test of its VSS Unity space plane, okay? A lot of us were very excited for this. Investors have been watching for news that Virgin Galactic had moved a step closer to commercial operations. Of course, that's what we want to see. That's what us investors really want right now. And commercial scale revenue growth. But when news of a flight test finally did come yesterday, it was not what we had hoped for. Instead of flying VSS Unity to space, Virgin Galactic announced yesterday the successful flight test only of the VMS Eve mothership aircraft that will be used to carry VSS Unity to altitude and release it to blast into space. And while repeated testing of the mothership is obviously useful and a necessary precursor to the next taste of spaceline, it's the latter that investors have been waiting for, and that's true. I'm not the most disappointed in the world. I did expect a little bit more. It is what it is, but it is leading to a sell-off, you know, partially. I don't think this is the only reason. I do think it's still just largely the broader market, but partially. But that could be an opportunity for me to buy more if I do see a really big red day. So guys, that's the 6 stocks. Now we're going to speak about 4 EV stocks. I'm going to go through them all really quickly because I cover them quite often on the channel. So I'm going to start it off with Tesla. We've seen some pretty interesting price action as of late. And by interesting, I mean boom, we're down 15.88%. Now, funnily enough for Tesla, that's not even really much of a crash, considering that it happened over the span of 2 weeks. We've seen 15% up and down multiple times over the last 6 months, but it has steadily been going down. And again, I'm not upset about this. I'm not happy with my position in Tesla. I would love to have a lot more money in Tesla. For months now I've been saying on the channel, I consider buying below 350, I would buy at about 300, and I would heavily buy if ever we fell into, you know, the mid to even high 200s. Now I know that is quite a bit of a crash, that is quite a ways to go down, and we may never see, you know, the 200s again, we may never even see the low 300s again, but this is Tesla, very, very volatile company, and all you really have to do is go onto that 6-month chart, and just look at the growth we have had. Look at the swings it can make to the upside in a matter of a week or two. Look at the swings we can make to the downside before recovering. Yeah, just look. So I mean, here we went from pretty much $500 all the way down to $330 in a span of a week. It's not outside of the realms of possibility, in my opinion, for Tesla to see a 30% drop at some stage. I know a lot of people will hate me for that. Look, I'm long on Tesla. I am bullish on Tesla. But in the short term, I think anything is possible with this company. Long term, do I think this is a fine price to buy? Yeah, I mean, I think if you buy at these prices, in 5 or 10 years, you're going to have made a whole lot of money. But I just think in the shorter term, I would be happier buying at those prices. The last time I bought was right down here. I bought a little bit at $340 a share, and it worked out nicely. But now I'm just waiting, and I'm being patient, and I think that's okay to do with Tesla. Now, on the other hand, I am considering just starting to buy a very small amount of these guys every single month, maybe 1 or 2 shares every month. I know it's not the most in the world, but it would add up over the span of a year or so. That's where I stand on Tesla. I think everything they've done over the last few months have been great. It's just the broader market selling off. Workhorse stock, this is absolutely insane. This is disgusting. Of course, it hurts to see. All of our portfolios are feeling this pain, my friends, if you're like me and a Workhorse investor. I did not think we would see the 15s again. Now, of course, I am very, very, very enticed to buy at these prices. If it was normal market conditions, I would 100% without a doubt in my mind be buying at current prices. We are not in normal market conditions. The next week or two will still be crazy. Just think of the elections, guys. Think of the Roni. Think of the vaccines. There is so many outside factors. These guys are being manipulated down to the ground, in my personal opinion. And look, the shorts have power. My hands are tied. The shorts have the power. I haven't bought more at recent prices, but I mean, I bought more at $24 a share. That should tell you that I do like them at current prices. If they weren't already the biggest position in my portfolio, even after this crash, I probably would consider buying more. But I'm just going to be patient, you know. I'm going to be patient, guys. I'm obviously not selling any of my shares. I don't have price targets right now. It's more so market sentiment that I'm looking for. It's more so I want to see the bulls be able to take control again before I buy in. I mean, a lot of people are asking me, surely I bought at 20, you know, that was already a massive dip, or surely I bought at 17. You know, I'd rather wait for a 10-15% move to the upside when I saw some real market sentiment before buying, as opposed to try and catch the very, very bottom. NIO stock, the opposite problem Workhorses have, and these guys are booming. They're going up to the moon. So I initially bought these guys in the 12s. I think I'm up about 120% right now. Whatever cost basis that means I have, it might be in the 13s or 14s. But wow, what a run up we've had. This has been absolutely incredible. Their 6-month chart is absolutely beautiful. You know, we've had our ups and downs, we've had our periods of consolidation, but ultimately, it seems like every couple of months we get a really nice spike. Am I happy to buy at these prices? Kind of not. I most certainly do see a pullback / correction at some stage. We've seen NIO move weirdly in the past. I mean, when the EV market has been going up, we've seen NIO trade sideways or go down. And just like now, when the EV market is going down, we've seen NIO booming up. But one thing's for sure, they're performing absolutely incredible, okay? Only a matter of a year ago, you know, these guys were, they were a penny stock, you know? They were very speculative. They were on the borderline of going bankrupt less than a year ago, and they have turned it around, and now they look to be in this absolutely fantastic position. Again, similarly to what I'd say to Tesla, I think, yeah, if you're buying at $30 in 5 to 10 years, you're going to be in a very good position. In the shorter term, I don't think it's going to be the best opportunity we ever have. And then boom, we have Ride stock. Again, horrific. Worse than Workhorse. Worse than Workhorse. Look at this sell-off. Boom, that hurts to see. Ooh. This is the only EV stock I have bought in 5 weeks, okay? I bought at $14.40 a share, so again, I didn't time it particularly well. I bought 90 shares, so I'm already down $100 on that buy. It's fine. Again, I'm very long term on Lordstown Motors, okay? I think these prices are insane, my friends. Genuinely. I think this is one of the safer, you know, EV stocks at this stage of their life cycle than anybody else is. Now, of course, they're speculative. They still are high risk, but I don't think they're as risky as, you know, some of the other players. I don't think they're as risky as a Workhorse or a Hyliion. I've been saying this for a very long time. So I bought at $14.40. You can bet that, you know, if we see some more red, I'm going to end up buying some more. And I recently did say I think I could see these guys becoming the biggest position in my portfolio, even over Workhorse. But guys, there is 10 stocks to watch next week, my friends. Oh yeah, I can't change to the camera because I don't have an SD card. I apologize for the quality, but if you have watched this video all the way until the end, you, my friend, are a true legend. I really appreciate you being here. And that quality is too bad. I'm going to make myself a little bit smaller. But genuinely, thank you so much for watching. If you enjoyed the video and maybe took some value, please consider hitting that juicy like button. Drop me a comment down below and subscribing if you're new around here. All of that helps me out so much. I really would appreciate you. And do just let me know what you are watching next week, because I am really interested, especially given the times we live in right now. I want to know, baby, you know. Is it EV? Is it, you know, gold and silver? Is it solar? Is it tech? Big tech? Small tech? What is it? But anyway, my friends, thank you so much for watching today's video. I hope you have an absolutely fantastic Sunday. I will see you for another video very soon. Peace.